Greetings, FreightWaves fans, friends, and family. You finally made it. Today is Friday. We're coming at you 4 o'clock each and every business day. And today we've got quite the lineup for you. We're going to be talking to Nick about the weather and find out what's going on. We're talking with JP about some seasonal rates. And we're also going to be following up with Jesse Cohen on some air cargo news that is happening right now. So let's go first to Nick Austin. And Nick, tell me, before we get into all the kale and the spinach going on here, everybody wants to know, like, other than moving to Palm Beach, Florida, how can we get out of this rain? And when is it going to end?
It's been actually dangerous in the south. I mean, there's been flooding in a lot of areas of Mississippi and across parts of Tennessee, including right here in parts of Chattanooga, FreightWaves headquarters. So there's been a front that's just stalled right over the south. But it is going to end sometime soon, by the end of the weekend. Actually, by early Sunday, a lot of it's going to be out of the south. So,
nice.
But there's still flooding potential today and tonight. Parts of the I-20, I-65 corridors, Nashville area, down into Mississippi, and parts of Alabama. So as far as rain, that's where the big problems are going to be. There could be road closures for those areas. But we know that snow and ice are a lot worse for truckers.
Absolutely. Any chance of any of this rain freezing on the roads? Are we still going to be above 35-ish?
No. Temperatures will be well warm enough.
Okay.
But there will be some trouble spots as far as snow and possibly some ice. But yesterday, I have to mention this because it's just kind of unbelievable. But yesterday, there was a lot of snow out in Arizona yesterday. Flagstaff, Arizona, which is just a little bit north of Phoenix, had a record 36 inches of snow just yesterday.
In Arizona, wow.
Yeah.
Who knew?
And Las Vegas has been getting light snow in the last couple of days too, so it's been a little crazy, but that snow's moving into New Mexico, the rest of what we call the Four Corners region, and it's going to be heavy in spots. And getting through some of the mountain passes up in the northwest and the Cascades, like Snoqualmie Pass, Stevens Pass, some of those areas, there's going to be a lot of heavy snow up there too. And just very, very slick roads today and heading into the night. So those are the problem areas. There will be temporary disruptions in those regions. And that's what's happening right now. But looking a little bit ahead into the weekend, this system here down in the southwest, it doesn't look so scary right now. But that's going to develop and get even stronger heading into tonight and the weekend. So there's going to be probably a blizzard up in parts of the nation's heartland.
Wow.
From around Des Moines, parts of Kansas, up into Wisconsin. During the day tomorrow and in the Saturday night. And then other parts in the Midwest and the Northeast, while they're not going to get tons of snow, it'll be really windy. So there will be a blizzard, at least for part of the weekend, in those regions of the country. So
yeah,
that's going to cause problems.
It looks pretty calm in the Northeast right now, which is kind of nice for them, right?
Northeast is quiet, yeah. They actually haven't had that bad of a winter in the Northeast. It's the Midwest and the Great Lakes states that have been getting slammed this winter.
Lake effect snow?
A lot of lake effect snow, and even just west of the lakes. I mean, these areas here in the Midwest, parts of Minnesota, over in the Dakotas, have just been getting slammed. So the Northeast has actually been getting kind of a break after they had those 4 back-to-back nor'easters in March of last year. Doesn't mean that couldn't happen again, but so far this winter, it's been relatively quiet.
Well, who would have guessed? I mean, they're getting snow in Arizona, and we're building an arc here in the southeast region. So it's the end of the world as we know it, I guess.
That's right.
Wow. Well, thank you so much, Nick. We
You bet.
appreciate it, and we'll keep an eye on that this weekend. Next, we have JP Hamstead speaking about some seasonal rates and some driver revenue. I love having JP on because a lot of the market experts will get down into the tactical, like what happened yesterday and the day before, and the daily moves. JP gets into revenues. He gets into a lot of macro things on what's going on. So I love getting his take on what's happening right now. JP, what's going on, brother?
Hey man, this chart came out of a story that I wrote about a piece of slang that I heard Chicago freight brokers using in their conversations with me. Sometimes I noticed they would refer to contract rates as paper rates, and they didn't quite really explain what they meant, but I gradually sort of put 2 and 2 together and realized that they were kind of suggesting that contract rates, sometimes there are some situations, some market conditions where contract rates, they might look good on paper, but reality has moved beyond them. And the reason why this is important is because a lot of publicly traded truckload carriers, for example, and also shippers will tell their investors that we're only 10% exposed to the spot market, or we're only 15 or 20% exposed to the spot market. The rest of our revenue comes from these stable, predictable contract rates. We can issue confident guidance for the full year based on our conversations with our customers, in the first quarter. But that's not really true. Sometimes contract rates are just paper rates.
Do you think they call them paper rates because it's not worth the paper it's printed on, it's not really a contract, that kind of thing? I know we've discussed that a lot in the office.
Yeah, essentially. And so what this chart shows in blue is revenue per driver per week for both company fleet drivers and owner-operators leased to companies. And this is TCA data, and it comes from their 20 or so best performing carriers in their truckload profitability program. And in orange, you have average national spot prices according to DAT for the entire country. And so that's, this y-axis is dollars per mile, and then this y-axis is dollars per week, okay?
Gotcha.
For revenue per truck. And what's interesting is that you can really see how spot prices will, pull revenue per truck up. When spot prices go down, revenue per truck goes down. They actually, and depending on how you display the chart, they can correlate. You see another slide down after the 2018 June peak there.
So it's a bit lagging, it looks like, but it still correlates a lot, right?
Yeah. Oh, no, so revenue per truck per week lags the spot rates. The spot rates are either going to pull that revenue up or pull it down. And the point is that the barrier or the boundary between contract rates and spot rates is sort of amorphous. It's diffuse. It's always shifting, especially in volatile markets. And everyone is actually exposed to spot rates. All of your revenue is exposed to spot rates. The spot rates are sort of, in a conversation I had with someone, they said that they're the signal flagsman, telling the market where things are going.
Right, and I know we've talked about spot rates. I've also heard the term soft rates. So if you have a routing guide as a shipper, you're top, you're not. I never go in the spot market, but a shipper could typically fall down on their routing guide, and those rates are going to be different the lower they go on that as well.
And that's another thing that is it sort of an additional fudge factor when carriers promise their investors, or they say on an earnings call or in a presentation that, oh, we're securing 5% or mid-single digit contract rate increases. Well, what they're not talking about is their relative position on the routing guide. If they got a 5% contract rate increase, but they lost a position on the routing guide, that actually tells you that there's downward pressure on contract prices, right, not upward.
So, and what they should be saying is we got a 5% increase on our paper rates, right?
Yeah, and a lot of times these, as these rates can be renegotiated quarterly. They're subject to change. They're not binding in the sense of a legal contract. Right. And so at FreightWaves, we've really been trying to explain to people why the spot market is so important, even if you have contract freight and contract rates.
Yes, definitely. So speaking of earnings reports, it looks like year over year, I mean, this is kind of trending up. I know you do a lot of earnings report and you cover a lot of companies. Are they reporting more earnings, better profits? I mean, is this kind of the blue? Is it good for the carriers?
I think so. Especially because essentially there are two things that carriers can do in a strong economy when there's a lot of freight. First, they can charge more. Secondly, they can if there's a lot of freight, they can be more selective about the freight they pick, so they can stay in their own networks better. They can move more of their capacity to dedicated, which actually is truly contract freight. And so, essentially they can become more efficient and charge more at the same time. And so you'll see that revenue per truck per week tend to go up. Especially, and this is, especially since about here, a pretty strong bull cycle for trucking started,
Right.
and we're coming down now.
Yeah, we are season. I mean, these are just pullbacks, I would say, for seasonality.
And I think if this chart went further out, obviously we have more recent spot rate data. These monthly revenue numbers are sort of on a lag, but
Right.
we think that clearly the deterioration in the spot market is going to pull revenue per tractor per week down from its highs.
Okay, all right. Well, thank you so much, JP, for bringing us that. I told you that would be interesting, looking at the seasonal patterns of revenue per driver per week, along with the rates and how they correlate. Last but not least, we have Jesse Cohen, who's going to talk to us about air cargo and what's going on. Jesse, tell us what you have for us today.
So, Kraz, I wanted to update the group on three major areas that we're following in the world of air cargo that can really change the market on pretty much short notice. The first is one we've looked at before, and this is really the business from China to the U.S.
So tell us what we have pulled up here.
So the Baltic Index covers ocean container rates. In this case, it's from China to the West Coast, and that's the blue mountain wave there. And then the orange line is the air rates from Hong Kong to North America. And you can see the pattern where the ocean rates, middle of last year, started going up significantly, and then the air rates followed. And this is really all the inventory stocking prior to the impact of tariffs or expected tariffs. Of course, the U.S. and China are in active trade negotiations. That's supposed to be concluded by next week, by March 1. And so I think everybody's watching what's going to happen. So we're waiting, word from Washington and Beijing in terms of, do we have an agreement? Is there a continuation of negotiations? But right now, here we are, toward the end of February. It's after Chinese New Year. Air rates are not yet reacting. They're not spiking back up. So we're not seeing any sign that the market is expecting tariffs, or maybe they're expecting negotiations to continue. Ocean rates continue to remain a little bit high, certainly higher than last year. But air rates are pretty much seasonally where they would normally be after Chinese New Year. So this is one we'll just keep an eye on, but really we're expecting this thing to change in the event we get into a tariff situation.
Yeah, this is interesting. So it looks like, I know the tariff talks, started around here, and we saw container prices go up as well. It looks like the air rates were a little bit reactive perhaps, but we had volumes in California, which is where this index is pointing us to, the Port of Long Beach, I suppose. And they seem pretty correlated, I guess, towards the end. Is this more Chinese New Year? Is it?
So this is really Chinese New Year. This is, essentially with air, of course, you can get the product there the next day. So here we have a 30-day lag. You don't need to hurry up and ship by air and then just have it sit at destination. You can ship later in the cycle. As we got to after Christmas, typically air rates will fall, then they will rise just prior to Chinese New Year, that last weekend before Chinese New Year, as everyone tries to get their inventories out, and then they'll fall again. Okay. So, it depends what happens on March 1. These things could spike back up. The ocean, essentially you've lost your time to reach the West Coast. Now the only way to get there is by air.
Okay, I see. All right, what do we have here?
So we have a similar approach here for Europe to North America East. We're keeping an eye on the prospect of tariffs on European automobiles and parts. That's back in the news. The U.S. Department of Commerce has made their recommendations to President Trump, and they'll make a decision on which way they want to go. They have about 90 days to do that. So the real question is the market reacting to this yet, or will the market start to react to this in the same way that we saw the market react to the prospect of tariffs out of China? So here we have the green line is the air rate per kilo, and it's as you can see very, very volatile. This covers about a year and a half's worth of information, and then the white line is the ocean container rates, which up until last quarter of last year were relatively stable. We've seen a lot more volatility lately. So I think, this is an area that we're going to keep a close eye on in relation to, as news comes out on administration decisions on what to do with respect to tariffs on automobiles and parts.
Okay.
This is a major trade issue between the U.S. and Europe. There's a lot of tonnage. There's about 343,000 tons of ocean freight a year coming primarily into Baltimore, Savannah, and Los Angeles, the top 3 ports. And then airport-wise, it's about 83,000 tons a year of air freight coming in primarily to Chicago, Atlanta, and the New York area. So, you know, what could happen, you know, you could have increased volumes coming through the ports and the airports, more congestion. These are things that we would watch for, increases in rates.
So correct me if I'm wrong. This is we're watching the air rates along with the container rates. So I'm assuming, and if you don't know, it's okay. Unless you're Oprah Winfrey or Tom Brady, you're not getting a car on a plane to bring it over here, right? Are you thinking more that you know, if we do have a capacity crunch on the ships coming over, maybe it'll spill over into the air, or
yeah, that typically is what happens.
Okay.
So you know, would we see ocean rates and ocean volumes come first, and then another 20 to 30 day lag to get the air rates up? And typically, you're moving parts by air, high-value parts, and you'll move more automobiles by ship. You can move automobiles by plane, but that's only very few of them are moved that way.
Okay, all right.
And our last slide, again, a sort of a political, economic issue that's in the news, is the March 29 date for Brexit. And what does that mean from a logistics standpoint? A lot of talk in the UK about getting their trade with the European Union, and whether there will be delays at ports and whether delays at border crossing points on surface transportation, and possibly the need to ship by air into the UK or to ship by air from the UK back to the EU in order to keep product moving, especially critical products. So there's a lot of uncertainty with respect to the possibility of a no-deal Brexit, a disorderly Brexit that could really make a mess of the supply chain.
Wow, this is interesting. Is this is capacity going from the U.S. to the UK?
So there's also some talk about the possibility of the UK needing to bring some materials in from the USA as an alternative to the European Union. And so what we did was we took a look at a 4-month period last year, March through June, presumably same months that the Brexit would impact, with the Brexit being March 29 of this year. We really took a look at if there's a spike in demand, urgent cargo, air cargo demand, would that change the rates, would that change the market? And certainly it'll have an impact on the market, but if we look at all of the capacity, all of the flying, a lot of it's passenger belly flying from a lot of airports throughout the United States.
This looks like it's less than 50% here. I mean,
yeah,
that
actually,
looks like there's a lot of room there.
Yeah, this is about 50%. Last year, roughly speaking, 50% of the capacity on all of the flights, passenger flights and freighter flights, was used from the US to the UK. And even less as capacity increases on passenger flying into the summer with increased summer schedules, particularly as you get into May and June, and then there typically is less demand. So, our observation would be that there is unlikely to be any movement in the rates because there's simply so much capacity. There's enough capacity to absorb it. I think the only area where we could see some upward movement would be some express cargo, more movement to express for people that want peace of mind, and then where there's a limited amount of freighter main deck service to the UK, those rates, those airlines that fly those kinds of airplanes may look for higher rates as capacity may squeeze on there. But certainly on the passenger side, which moves most of the tonnage right now from the US to the UK, there's adequate capacity.
Yeah, I mean, I'm just getting flashbacks from my LTL days, and the most expensive thing you can ship is air. So I'm thinking that these airlines have a need. Obviously, there's plenty of room for freight and revenue as well.
Yeah, so basically these airlines, for the most part, are driven by passenger schedules. Rates to the US, rates from the US to the UK are pretty low. There's just not enough demand, but there's a lot of passenger demand. It's a great passenger market. So that's what's driving the excess capacity.
Okay, all right. Well, thanks so much, Jesse, and thank you for tuning in today, each and every day, business day on Fridays, Monday, Tuesday, Wednesday, Thursday, and Fridays at 4 o'clock. And have a great weekend. We'll see you on Monday. And as Chad always reminds us, don't worry, be happy.